please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast in the Mumbai News Centre. I am Anisha Jain and with me is Mangalam Malu. Well, Mangalam, good morning. For the last 3 days, we have seen solid gains coming in for the Indian markets, bulls firmly in control. But today, the Asian markets are a bit subdued and SGX Nifty pretty much flat.
Absolutely, everything is flat. But the key domestic cue that we got overnight was Anushka Sharma and Virat Kohli got married. So thankfully, all the speculation can end right now, and we shall wish them good luck from here on. But first up, all the top stories that we're tracking at this point in time. Wall Street, that one ends higher with the Dow and S&P 500 ending at record levels. Brent Crude spikes to a 2.5-year high after crucial pipeline in the North Sea has been shut down for emergency repair work.
All eyes on the Federal Reserve as the two-day FOMC meeting starts today. Consensus is that Janet Yellen will announce a rate hike in her final news conference due tomorrow.
Budget talks in full swing. The finance minister meets top economists and IT industry representatives. The wish list gets longer as the countdown gets closer.
Former Governor Y.V. Reddy says the panic amongst depositors regarding the FRDI bill must be addressed. Also wonders whether the FRDI mechanism is needed.
Bitcoin futures soar as the virtual currency begins trading on the Chicago Board of Options Exchange. The price of the first ever futures contract for the digital currency jumps 20%.
And the Rahul Gandhi era has begun in the Congress party. He will take charge of the party on the 16th of December after getting elected unopposed. Prime Minister Modi wishes Rahul Gandhi a fruitful tenure. More on that later on the show.
Indeed, more on that later on the show. But first up, let's take a look at the Asian markets. They are absolutely flat. Flat as flat can be. And remember, this is despite some strong cues coming in from the Wall Street. The traders chose to be on the tenterhooks, on the fence ahead of the two-day Fed meeting, which begins later today. The outcome likely tomorrow. So no real change seen on the Japanese currency or the index. But the Korean market, that one should come for you. That one's the key underperformer across the Asian pack as we speak, down about 0.5% and led lower by a few retailers as well as a few oil companies. Brent was up about 2.5%. And we saw some cuts come by on POSCO too. But again, flat moves on both Straits as well as the Taiwanese index, slightly on the redder side for the Straits index, but nothing really to complain, just a 4-point downtick. As a result of which, the SGX Nifty absolutely flat there too, was hovering between the red and the green, oscillating around that mark, but now indicates a start with a 3-point downtick.
Okay, so those are the cues coming in from Asia. But on Wall Street, the S&P 500 and Dow closed at record highs, led by gains in energy and technology stocks, while the Nasdaq was up 0.5% up close. Investors are now focused on the two key meetings of the Fed and the ECB later in the week. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
U.S. equities closed higher, reversing earlier weakness following a terror incident near New York City's Times Square. Dow gained 57, the S&P 500 climbed 9 to finish at all-time closing high there. Energy and tech stocks were among the best-performing sector. Nasdaq tacked on 35. The major indexes shook off news of that explosion that took place in Times Square earlier on Monday. A low-tech device exploded during rush hour Monday morning at New York's Port Authority, injuring 4 people, including the man carrying the device. Wall Street also looked ahead to the upcoming monetary policy meeting by the FOMC to see if the central bank does raise interest rates for the final time this year. The meeting starts Tuesday, and the committee is scheduled to announce its decision on Wednesday. Investors also keeping a close eye, of course, on any developments coming out of the Trump administration as lawmakers try to overhaul the U.S. tax system. We also heard from a few companies boosting their dividends, including Eli Lilly, Zoetis, and Boeing.
That's right. Janet Yellen's last Fed meet as the Fed chair. The Fed is expected to raise rates at its two-day policy meeting, which begins today. What are the expectations from the statement, and what will Janet Yellen's key focus areas in her last policy meeting be? Well, Sri Jegaraja from CNBC reports.
The central question really is going to be where is the inflation? We didn't really see it in the wages number and that component in the payrolls number last week, and it may be being masked by a lot of the structural changes and the disruption, automation, etc., that we are seeing in the workplace. So one has to wonder whether Janet Yellen is going to be talking about this and what she is going to say about the low inflation environment, and whether she will really stick to her guns that it is going to be transitory, or whether she will signal that it's going to start rearing its ugly head in 2018. This is going to be Janet Yellen's last FOMC before she turns in and her term expires in February next year. So it will be a very important meeting by that metric, and after that she will be handing over to a Powell-led Fed. So there are a couple of questions that may come up, I think, in terms of the Q&A in the press conference. Remember, this is a meeting that does have a press conference, also has economic projections associated with it. So the strength of those economic projections will be a guiding element, I think, for 2018 and the rate and the policy outlook. There are a couple of issues that could come up. Inflation. When is it going to rear its ugly head? Janet Yellen's going to be grilled about that, and of course the policy path, and then on top of that, tax cuts and how that is going to factor into the policy mix. And I think this is going to be an interesting headline coming out of there. I think that she might be lobbed a question about Bitcoin. About Bitcoin and the risks it could potentially pose in terms of contagion if the whole thing comes undone, whether that's going to spill over into the more conventional and traditional capital markets.
Okay, so those are the key expectations from the FOMC meeting. But what is the road ahead for the US market, and how is 2018 shaping up? Here is a word from Jeremy Siegel.
If you go with the 3 increases, you know, that brings the yield on cash to 2%. When have we last seen that? That actually is, for the first time in a decade, higher than the dividend yield on the S&P. No one knows when that inflation is going to be ignited. Is it, we're at 4.1. At this rate, we go below 3.5 by the end of next year to 3. There's almost never been a time when that has not accelerated wages, which does mean a challenge for equities. I don't predict a disaster next year, but a breather more than anything else. We're at 20-21 price-earnings ratio. We're at high margins, and I can justify that in a low interest rate environment. But you know, GDP growing at 5%, I don't see how that continues to generate a double-digit earnings growth at these margins and these levels. So I think we're going to have a slowdown. I think we're going to really have single-digit earnings growth next year in a rising interest rate environment, and that will put a pause to the big bull market.
Okay, sticking with US then, the mega tax overhaul in the US is another important cue to watch out for. What could this mean for the economy? Here is some opinion from Austin Goldsby from University of Chicago.
If you look at the bill as it's flowing through now in both the House and the Senate, it's going to raise taxes on millions of middle-class people in order to give a gigantic tax cut for people with $20 million estates, for corporations that already have the highest profit levels that they have ever had in the United States, and to cut the rate on millionaire pass-throughs. It doesn't make sense. More important, both politically and in content, everybody making less than $75,000 is getting very little, and millions of those people's taxes are going to go up. In order that we cut taxes by trillions of dollars for corporations whose profit rate is already at record levels, and to abolish the estate tax and things like that. It doesn't make sense.
All right, shifting focus across the Atlantic then, in the European markets, they closed lower despite a bounce in the commodity stocks. The key outperformer was the FTSE, which was up about 0.8%. And that happened on the back of a weaker pound. Good news for their exporters out there, and some gains seen in the mining stocks given the rise that we saw in commodities. But apart from that, the CAC as well as the German DAX, both of them ended in the red with a cut of almost 0.25%. There are two important federal meets, or two important monetary policy meets lined up for this week. The US Federal Reserve, which starts to meet today, and the ECB meeting, which happens on Thursday itself. The expectations are that the Fed will raise rates one last time this year. Meanwhile, even though it's unlikely that the ECB will alter its policy this week, it's expected to continue to announce new economic forecasts for the region. Across the periphery too, we saw some red tick, but importantly, with the 2.5% jump that we saw in the crude oil prices, the Russian index was a beneficiary of that. So the Russian index, which is heavily weighed in favor of the crude stocks, that one gained about 2.2% on the back of a rally that we saw in the crude prices.
Okay, let's shift focus now to something that has been catching everyone's eye, and that is Bitcoin. The futures debut with 26% rally, triggering the CBOE to halt trading. CNBC's Eric Shemi tracks the historic rally of the cryptocurrency.
It all started back in October 2008 when a paper describing Bitcoin was published by the mysterious Satoshi Nakamoto, whose true identity we still don't know for sure. The oldest price we found on CoinDesk's database, 9 cents, all the way back July 2010. But it would take another 8 months to close above $1. That was February 2011. And then you had to wait all the way until April 2013 for the first mention of Bitcoin at an S&P 500 company shareholder meeting. The shareholder actually asked about biocoins, but Discover CEO David Nelms corrected him before dismissing it as a fairly niche kind of thing that would have no noticeable effect. You can see that here on the chart, really still in the early stages back there in 2013. You wait till November 2013, it closed above $1,000 for the first time, but just 9 days later, it was back under 700, so it lost 30% that quickly. A year later, PayPal started accepting Bitcoin in 2014, and then another year later, November 2015, the U.S. Marshals finished selling 144,000 Bitcoins seized from the operator of Silk Road. And then just 3 months ago in September, Chinese authorities cracked down on Bitcoin exchanges. BTC China, the country's largest digital currency exchange, shut down and Bitcoin prices fell 10%. Also in September, Jamie Dimon told a CNBC audience that Bitcoin is a fraud. But 10 days ago, Bitcoin closed above $10,000 for the first time. And here we are today, approaching 20,000. You see behind me 17,000 with real futures trading on the CBOE. So it's been a big, wild ride back and forth.
Big wild ride indeed for the cryptocurrency. But let's move on to the traditional currency. The dollar steadies against a basket of major currencies as the Federal Reserve is expected to hike rates on Wednesday, though concerns about tepid inflation weighing slightly on the greenback.
And in the world of commodities, oil prices rise, reversing earlier declines after North Sea pipeline shuts for repairs. Meanwhile, U.S. rig count rose to the highest level since September.
From the precious metal space, gold prices steady after its biggest weekly drop in more than 6 months as markets anticipate an interest rate hike from the U.S. Federal Reserve this week.
Okay, time now to slip into a quick break. Up next, we'll get you all the cues and news you need to know for the trade this morning. Stay tuned.
Now let's shift focus back home on the Wall Street. Yesterday, major indices, both of them gained over 0.5% each. The market closed in the green for the third consecutive session. Nifty above that 10,300 mark. The Nifty mid-cap index, though, ended at record closing highs, hit the 20,100 mark for the first time ever. The Nifty Bank, though, mildly underperforming, ending with gains of just about 0.3%. How are the cues stacked up for today? While the SGX Nifty indicates a flat start, what other things are we watching out for? Anisha joins us to tell us. Anisha.
Well, yes, Pankaj, as you mentioned, the markets have been very steady for the last 3 days. We have been gaining for 3 days straight. And if you look at the Nifty, it is comfortably above the 20 and the 50-day moving average, above the 10,300 mark. The mid-cap index, as you mentioned, closed at record highs. But what is not, participating in this rally is Bank Nifty as of now. That one has been underperforming. That one is still below the 20-day moving average of around 25,469. So that is one key level to watch out for. As far as Nifty is concerned, well, experts say that yesterday low of around 10,282 is the key level that we should watch on the downside. But on the upside, they say that the upside is a bit capped, given that there is no further trigger. The stock market has already reacted to the opinion polls coming for Gujarat, and they say that it's looking for fresh triggers. So let's see whether it moves on the upside today or it consolidates, as the SGX Nifty is suggesting as well. Other than that, we see a bit of profit booking is what is happening, because FIIs continue to sell they have sold around 185 crores in the equity markets yesterday, while the DIIs bought around 108 crores in the equities market yesterday. If you're looking at the global screen for cues, well, the cues from Wall Street were positive. The Dow and the S&P 500 closed at record highs yesterday. Of course, the biggest cue for the US market is the FOMC meet that is scheduled to start later today. The policy decision will be tomorrow, where the street is expecting the rate hike to come by. Remember, there was a bit of terror incident as well in New York yesterday, where there was a small explosion that happened in the Times Square, but the markets completely shrugged that off and closed at record high as far as Dow and S&P is concerned. European markets, well, the FTSE was up around 0.8% given the boost by the currency as well as the uptick in mining stocks. And also the French CAC and DAC, these were the ones that ended down about 0.2%. Remember, the biggest key for the European markets is the ECB meet that is expected to start on Thursday. They are not expected to bring in any major decisions except announcing new economic forecasts for the region. So something to look forward. Perhaps the investors sitting on the sidelines ahead of that. As far as the Asian screen looks today, the cues are a bit mixed. The last time I checked, Nikkei was holding up in the green. That is because there was some positive data that came out of the Japanese economic data that came out. The domestic CGPI grew by 0.4% month on month versus the Reuters poll of 0.2%. So that was what is lending some bit of positivity to Nikkei, up around 0.07%. Other than that, Kospi was trading in the red. SGX Nifty 10 points downtick is what it was suggesting earlier when we saw that. Other than that, if you look at the domestic cues, well, the factory output numbers or the IIP data for the month of October will be released later today in the evening. Something that will, of course, drive the cues for tomorrow, but something that the street would look forward to. CPI data for the month of November will also be released, something that the economic experts are keenly watching out for after the last month's numbers. And, of course, Gujarat elections, that is something that the street has already been factoring in. The campaigning for phase 2 ends today. So that is, again, something that the street is looking forward to. And, of course, Brent Crude, because those prices are up around 2.5% overnight. Let's see how the stock markets react to that particular cue as well.
All right, Anisha, thanks a lot for apprising us of all the cues. But what are the stocks that one should keep an eye out on?
Well, of course, crude-related stocks will be in focus. So the energy stocks, paint, aviation, all should be in focus. But other than that, PNB has launched a QIP and they are looking to raise around 5,000 odd crores with a floor price of 176. The current market price is 172. So that should see a bit of reaction. Natco Pharma also approved a QIP. The rate is around 940 versus the current market price of 960. So that should see a bit of downtick, technical adjustment there. If you look at the Divi's Lab, they have got a positive US FDA wherein they have been issued an EIR for formulations of manufacturing plant 3 at Bachapalli. So that should react positively in trade today. Unitech, that has remained in focus for a while. The Supreme Court is again going to hear the case today. So let's see what comes out of that. That has been an interesting developing story. Fresh Drop Fruit, the company begins trial production of ready-to-drink beverage. So let's see if we get any positive take on that on account of that. Asian Paints, they have purchased a residual 49% stake in Sleek, which now becomes a 100% subsidiary of that company. HEG Limited, a positive news as India Ratings has upgraded the credit rating. Similar is the case with Den Networks as well. And in terms of numbers, the cues keep on coming in. It's not the end of the result season yet. V2 Retail, we have seen good numbers coming in there. The revenue is up 33%. And the profit has also seen a smart jump. Nandan Denims, the numbers have been steady. Revenue growth has been strong at 37%, but the PAT is down about 1% in trade. Lhasa Supergenics, weak set of numbers. The revenue is up around 10%, but the profit is up around 23% on account of a one-off. Other than that, the operational performance there was a bit weak. So overall, Mangalam, these are the stocks really to watch out for in trade today.
All right, Anisha, thanks a lot for that. A lot of mid-caps that you spoke about in the stocks to watch. So let's go straight and get in some market opinion on the mid-cap space itself. Nilesh Shah, the MD of Kotak Mahindra AMC, expects the mid-caps to be volatile going ahead, but according to him, the disrupted versus disruptive is the theme for 2018.
I think we are seeing two trends up from investor point of view. One, which is in minority, is looking at the past performance and coming into mid-caps. In mid-cap, there will be higher volatility. It will be either because of market movement or even because of business movement. One big theme which is worth banking not only in next year but years to come is disruptor versus disrupted. In financial services, fintechs are disrupting existing business models of banks, insurance companies, mutual funds. In manufacturing, 3D artificial intelligence is disrupting traditional modes of manufacturing. In services, robotics is disrupting human way of providing services. So there is no sector which is outside the influence of technological and other forces of disruption.
Rather interesting that disruptive versus disrupted is the theme for 2018. With that, we'll slip into a short break, come back and we'll get you interesting chat with the former governor, Y.V. Reddy, who says the panic amongst depositors regarding the FRDI bill must be addressed. More on that when we return.
Well, speaking of insolvency and bad debt, two former RBI governors, C. Rangarajan and Y.V. Reddy, have welcomed the recent changes to the bankruptcy law. Both former governors supported the move to keep defaulting promoters away from the bidding process of their own debt-ridden companies.
Ordinance that the government has brought that promoters should not be allowed to buy back their the assets of those large NPAs which are now with the bankruptcy courts. Your thoughts on that?
Well, my immediate reaction is that it doesn't appear to be a wrong thing to do. I mean, because if a set of people have been responsible for getting the institution into a bad shape, into a bad situation, to enable the same to come back and bid through the roof doesn't appear to be right. But I am told, and I read elsewhere also, that in other countries this is permitted. This is not, the promoters are not barred from doing it. But we are in a difficult situation. Please remember that all the actions that we are taking are putting a strain on the fisc also.
Yes.
Therefore, if there is a haircut, ultimately the burden falls on the fisc. At that particular time, it looks somewhat inconsistent.
The ordinance to the bankruptcy code doesn't allow promoters to buy back the companies unless they clear every penny of the loan or most of the loan. You think that's
I don't know. I think it's a way of, when there's some circumvention of law or something like that, I think.
No,
it's in some ways an extension to the principle of Benami. You have got one entity, you marked it up, you create another entity, the same person's comes in. So it in some ways prevents the misuse of the identity.
But you're in sympathy with that?
I don't know the details, and that's not my area of...
Okay.
All right, that's not all. Former Governor Y.V. Reddy also spoke about the panic amongst depositors regarding the FRDI bill, said that the depositor concerns must be addressed. He also wondered whether the FRDI mechanism itself was needed at all.
The other issue I wanted to ask you, and again, this is a law which only the text is available on the PRS website, of a financial resolution corporation that is going to be created. Now, this FRDI bill is making everyone anxious because it says that when a bank fails, the deposits of the bank also can be bailed in to bail out the bank, as it were, convert some of the deposits into share capital or maybe extend the tenure of the deposits. It is creating panic. Should people panic at all? After all, Government of India and Reserve Bank did not allow Global Trust Bank depositors to to lose. It did not allow Bank of Rajasthan depositors to lose. Should we panic about this bill?
Then if that is so, then why is bill? If the existing situation didn't raise a problem, I mean, I'm just, the counter can be, the existing situation is not creating a problem, then why are you having this law?
Okay.
I'm not...
They're trying to create a resolution corporation and maybe...
Because it is
superior.
The question that's being asked, I mean, I'm just...
okay.
I don't know. I don't know the detail.
Your counterfactual question.
I don't know the detail, but normally there's a problem, then there's a solution.
Okay.
What you say is there's no problem, so what's your problem? I said, if there's no problem, what solution are you trying to give?
Okay. Well, okay.
So why are you trying to give me a solution when there's no problem?
All right. So basically you think people are justified in being...
I don't know, but definitely people are panicking, that I can tell you. Yeah. Any number of messages I got, and I'm again pleading ignorance because I don't know much about that.
Okay, so interesting conversation there, but time now for a quick break. Up next, pre-budget talks are in full swing as the finance minister meets top economists and IT industry representatives. Details on the wish list when we return.
Let's take a quick look at the Asian markets. We're getting rates coming in from both Shanghai as well as Hang Seng. Shanghai is the one which is down about 0.2%, but the Hang Seng absolutely flat, in line with how the other Asian markets are performing. Let's take a look at the SGX Nifty as well and see if it has moved a little from the time when we started the show. But as we speak, it is absolutely flat, that one too. Let's take focus, or let's shift focus then to the important pre-budget talks which are on in full swing. And yesterday, the Finance Minister Arun Jaitley held a meeting with some of the top economists, including the members of the Prime Minister's Economic Advisory Council. Here were the key items on the agenda. More than one economist recommended the imposition of long-term capital gains tax on equities, so something which can cause a bit of a nervousness in the equity markets. Also discussed at the meeting were interest rates. The biggest concern, according to the economists, was the non-transmission of the rate cut benefits. And finally, the economists also discussed the issue of rural distress and the need for job creation. In fact, what was unusual about the meeting is that probably for the first time in the NDA regime, two left-leaning economists, Jain Rees and Himanshu, were invited for the pre-budget talks.
Okay, and we caught up with former Chief Economic Advisor Arvind Virmani. Here are some of the budget expectations.
There is a long-term thing where there seems to be a consensus among all economists that we must decrease the fiscal deficit, and some people like myself focus on the revenue deficit because that represents the net dis-savings of the government. So by and large, most economists, whether it's yesterday or day before, all agree that in the long term we must bring this down. The issue of some contention in a way in the short term is some people feel and basically, you know, from an economist's point of view, it hinges on credibility.
All right, and it wasn't just the top economists who put forth their budget wish list. IT industry body NASSCOM too met with the finance minister to address some of the key issues plaguing the sector. Here are some of the things that were discussed in the meeting. First up, issues related to service tax as well as service tax refunds were discussed with the finance minister. The industry body also brought up barriers faced by the IT industry in markets across the world, specifically the US, and the need for the action by the government in resolving them. In fact, speaking to the media, R. Chandrasekhar, the president of NASSCOM, said the government gave them clarification on the recent tax notices sent to a few IT companies, went on to say that the matter had been resolved.
Specifically, there were certain asks with regard to the budget, which relate to, for example, the kind of tax notices which had been issued recently to a few companies, which actually do not recognize IT services as export because of some interpretation. We were happy to note that the government has clarified in today's meeting that that situation has been corrected, suitable advisories have been issued, and that problem has been resolved.
Okay, time now to slip into a quick break. Up next is the last day of campaigning today before the final phase of the Gujarat polls. More on that when we return. And it is also a new era for the Congress. Rahul Gandhi has been declared the president-elect of the Indian National Congress after being elected unopposed. Celebrations broke outside Janpat and other Congress offices across India as Rahul Gandhi will officially take over the reins of the party on the 16th of December. He will take over the reins from his mother, Sonia Gandhi, who has been the party chief for around 19 years. The 130-year-old organization is entering a new era as the new president is facing a litmus test in Gujarat, where results are due next week. In fact, setting political differences aside for the moment, Prime Minister Modi tweeted congratulating Rahul Gandhi and wishing him the best for a fruitful tenure.
Okay, then let's shift focus back to the markets. Punjab National Bank, that stock will be in focus today as it announces a 5,000 crore QIP issue. Abhishek Kothari is here with the details. Abhishek, morning.
Good morning, Mangalam. So, Punjab National Bank has launched a QIP of 5,000 crore. Now, the offer price mentioned is at 168 rupees, which is at close to 2.9% discount to yesterday's closing price at NSE. Tier 1 ratio will improve by 107 basis points to 9.96% versus 8.8 that they recorded in Q2 FY18. Now, the equity dilution is seen at 12.3 or 12.27% in the indicative price that they have offered. So, government's holding will come down to about 57% from 65% currently. The impact on book value is that FY18 book value could be lower by 4.4 rupees to 199 versus 203 that analysts estimated earlier. Back to you.
Okay, so FY18 book value to decline by around 4.5 rupees is what Abhishek tells us. The QIP is worth around 5,000 crores with a price of 168, just a tad bit of discount to the current market price. And as he mentioned, the tier ratio will improve by 1.07%. So Punjab National Bank clearly will be in focus today. The equity dilution around 12% mark is what Abhishek tells us. But let's move on and talk about another stock that will be in focus today. Dr. Reddy's Bachapalli Formulations plant has received an EIR from US FDA. What will be the impact on the stock? Sonia is here with the details. Good morning, Sonia. What do you?
Hi, Anisha. Thanks so much for that. Well, I'm just filling in for Ekta and I expect the stock to be in the green today. That is because, as you rightly pointed out, Dr. Reddy's Bachapalli plant has received the establishment inspection report from the US FDA. Now, remember, this plant contributes more than 50% to the existing US business. So it's a fairly important plant in that perspective. And with this EIR being received from the US FDA, they have now successfully closed out all the pending 483s from the April 2017 inspection that there was. Now, there are no financial implications, obviously, but this is a big overhang that, gets out of the way. And I expect the Dr. Reddy's stock to be in the green today.
Sonia, thanks a lot for that. With that, what we'll do is slip into a short break, come back, we'll focus on all the cues to watch from the futures and options space. Stay with us. Another quick look at the Asian markets, flat as flat can be. The Nikkei up just about 6 points as we speak. The Shanghai index actually has extended its cuts, opened with a cut of about 0.2%. That one's gone to the low point of the day with a cut of 0.3%. The Hang Seng, again, absolutely flat. A bit of a slumber seen in the Asian markets. And remember, this comes despite strong cues coming in from the Wall Street. However, investors and traders, all of them on the tenter hooks, but we are seeing some slide come by in the Korean markets. It's trading with a cut of about 0.5%. The Straits has extended its cuts along with the Taiwanese index, which was down about 0.1% at the start of the show. What does this mean for the SGX Nifty? Well, earlier indicated a start in the green with a 3-point uptake, then indicated a cut of about 3 points, and right now it is exactly where it was, a cut of about 4.5 points. Most of the markets, remember, are on the tenter hooks because of the Fed meet that begins today, the outcome likely tomorrow. And not just that, in the Eurozone we have the ECB meet too. So let's talk about the expectations from the Fed meet. Expectations are that the Fed Chair Janet Yellen will hike rates in her last policy meeting before her term expires in February. CNBC Sri Jagaraja, he reports on the key expectations there.
The central question really is going to be where is the inflation? We didn't really see it in the wages number and that component in the payrolls number last week, and it may be being masked by a lot of the structural changes and the disruption, automation, etc., that we are seeing in the workplace. So one has to wonder whether Janet Yellen is going to be talking about this and what she is going to say about the low inflation environment, and whether she will really stick to her guns that it is going to be transitory, or whether she will signal that it's going to start rearing its ugly head in 2018. This is going to be Janet Yellen's last FOMC before she turns in and her term expires in February next year. So it will be a very important meeting by that metric, and after that she will be handing over to a Powell-led Fed. So there are a couple of questions that may come up, I think, in terms of the Q&A in the press conference. Remember, this is a meeting that does have a press conference, also has economic projections associated with it. So the strength of those economic projections will be a guiding element, I think, for 2018 and the rate and the policy outlook. There are a couple of issues that could come up. Inflation. When is it going to rear its ugly head? Janet Yellen's going to be grilled about that, and of course the policy path, and then on top of that, tax cuts and how that is going to factor into the policy mix. And I think this is going to be an interesting headline coming out of there. I think that she might be lobbed a question about Bitcoin. About Bitcoin and the risks it could potentially pose in terms of contagion if the whole thing comes undone, whether that's going to spill over into the more conventional, traditional capital markets.
Okay, let's shift focus now to the world of commodities, and Manisha Gupta is standing by to tell us what is happening in the world of commodities. Manisha, good morning. Well, oil at a 2.5-year high, but I'm more interested to know about the cryptocurrency that the street is talking about as far as oil is concerned.
Oh, well, yes, very, very interesting on that one. So while the crude oil prices, yes, have gone to almost a 2.5-year high, a good 2% of a jump is what we've seen for Brent. And as we've been reading, it's all because of the UK pipeline now developing a crack, and it may take a couple of weeks to get corrected. And nearly 450,000 barrels every day of 85 oil platforms gets into UK via that. So with the winter season approaching, this kind of a crackdown is what is building up in the premium in sense of prices. Apart from that, while there's plenty happening, but as you mentioned, yes, the oil currency or the oil coin is something that is what is being developed by the oil markets here. So ICO, that is the initial coin offering, is expected to come in for Jan 2018. And they really are pitting it as the first regulated cryptocurrency that would come in, as the underlying for this one is crude oil. So 1 barrel of oil is equal to 1 oil coin. That is how it is being put across. And there seem to be a lot of takers for this, because remember, for the longest time we have been talking on how the crude oil trade, which happens in dollar as of now, is trying to be converted into other currencies. So if there is one currency that is acceptable by all and not regulated by one single central bank, I think there would be a lot of takers for that. But this is for January 2018 as of now.
All right, Manisha, rather interesting buzz happening in the cryptocurrency space. I think with the oil coin and Bitcoin coming in, we need to focus on what Nilesh Shah said to us as well. He said, why not go ahead and make an indie coin itself? But let's keep an eye out on our markets itself. All the cues coming in from the futures and options space. The one thing that really stands out is the FII selling that has waned off a little in both the cash markets as well as the futures market. They have added some positions on the long side. They've sold about 186 crores in the cash market. That is lower than what we've seen in the past few trading sessions. And in the index futures markets, after selling a lot over the last 5-6 sessions, they've added about 110 crore rupees worth contracts. And in effect, what actually took place was a lot of short covering, because if you take a look at the FII's positions, they've unwound some long positions but covered more short positions. They covered some positions in short index calls as well and unwound some long puts. So all in all, they are getting a little jittery after the 3-day up move. If we can sustain that, remember, there are a lot more shorts in the system that are still awaiting to be covered. The FIIs chose to play the up move by purchasing long index calls, so added about 9,300 long index calls, and as a result of which the put call ratio, which was hovering around that 1.1 mark just a few sessions ago, has now spiked to 1.3. The key level clearly for the Nifty is the 10,300 mark. That is where the most amount of action in terms of options took place. The 10,300 put writers added about 5.4 lakh shares. Bulls believe that is the mark that can be defended, and the call writers out there unwound some positions. About 6.8 lakh shares were shed out there. The bears getting a little jittery. In terms of stocks, watch out for Fortis. That one comes into the F&O ban after the cut that we saw on that price yesterday, after the Max India license was cancelled. That stock was collateral damage. Fresh long seen on both Walkhard and Arvind. There was a CLSA note on Arvind. 21% open interest added on both these counters. And M&M Finance in Dalmia Bharat, both these stocks too saw some long positions being added.
Okay, Maglam, thank you for that. But on to the bullseye corner now. Our contestants this week, Sumit Jain, Ashish Kyal and Ruchit Jain, are battling it out for the strongest portfolio. Let's hear their picks for the day 2 of the week.
My first buy is on Aegis Logistics for target of 295, stop loss below 263. Second buy call is on GHCL for target of 318, stop loss below 293. Third buy call is on Lumex Auto Technologies for target of 722, stop loss below 677. Last and final call is a buy on Thermax Limited for target of 1275, stop loss below 1197.
First call for today on the buy side is going to be ICICI Lombard, and long positions can be created in this stock, keeping a stop loss of 744 for the target of 814. Next stock on the buy side is going to be Bombay Dyeing, and stop loss for Bombay Dyeing has to be maintained at 230 for the target of 258. Next stock on the buy side is going to be JK Paper, and stop loss for JK Paper has to be maintained at 132.50 for the target levels of 146. And the final call on the buy side is going to be Tata Global, and stop loss for Tata Global has to be maintained at 290 for the target of 320.
And Ruchit Jain has his picks. His first pick is a buy on NIIT Tech, target of 681, stop loss at 627. Second pick, a buy on LT Foods, a target of 92, stop loss placed at 79.2. Third pick, also a buy on Pfizer, this time with a target of 21.75 and a stop loss at 19.80. And the last pick, a buy on Natco Pharma with a target of 1,045 with a stop loss placed at 944 rupees.
Okay, so those were the picks of our Bullseye contestants, but that's all the time we have on Power Breakfast. From the team and myself, thank you so much for watching. Stay tuned to CNBC TV18. Bazaar Morning Call comes up next.